So today we're going to talk about Sofi, and we're going to give Sofi its own video. Yesterday we did talk about it, but we split the time between Sofi and Supreme. Today we're going to talk about Sofi after their fantastic Q4 and what that means for the company going into 2024 and beyond, because this looks like a very exciting stock, and we'll take a look at the financials they just brought out in a little bit more detail. So I hope you enjoy it. Let's get started. So as we saw yesterday, Sofi had a really good reaction on the share price. Now obviously the reason why it was up so much is that the earnings were fantastic, but there's a little bit of short pressure going on there because there's a lot of heavy shorts on this stock and they were getting punished. That's why today the stock is given actually a little bit of a back today because of them shorts trying to take control again. So that's what's going on with the stock price at the moment. But overall, it is crazy to look at Sofi that is now an $8 stock. But realistically, this came through a SPAC at $10. And since that time frame, the stock is actually still below its SPAC prices. But saying that, it did reach the levels of $4, which is absolutely crazy, in December 2022, and it has gone up a lot since then. Now, personally for me, I've always said Sofi in the $6 range is where I like to buy. Even though I started buying in the $4 range, I did still commit to buying shares in the $6 range because I still think that's pretty good value for this stock and the financials they're doing. Sofi is a personal finance company and online bank, but it is an online company only. So this company is going to be very favourable with the younger generation coming through who are a cashless generation, who want online only really. And obviously for Sofi's point of view, if they can offer the best platform and the best products than anyone else and it's online only, them themselves are going to acquire a lot of new young banking customers. But as well as that, because they are online presence only, they're going to have profitability levels a lot faster than what we've seen from all of these traditional banks. And if Sofi can ultimately do what they're trying to do, which is become a top 10 financial institution, then they will be a stock that sees much success from these levels that we're at right now. I think it was Luke on the Discord shared this, and I was going to do this all individually, but I thought this that he shared summed those earnings that they've just brought out very well. So you can see here they beat revenue by 4%, they beat EBITDA by 26%, they beat on GAAP EPS. If you look at the next quarter, which isn't as important, we want to see more on the full year guidance. The next quarter is obviously quite short term, so we're looking for the longer term outlook, as we are holding this for the longer term, that if Sofi does really benefit in the next 5 years, this is where we'll get the share price return, even though some of us have already got very good share price return on it. But you can see here that they missed revenue by 1.3%, not that much to worry about there. EBITDA estimate was a beat by 4.5%, and at the moment EBITDA is probably the metric that we look at for this company here. They're guiding to $6.67 in GAAP EPS in 2026. That's compared to the consensus of 0.45. So obviously a lot more visions of profitability, and obviously that will make the PE ratio look very low as well in 2026 as well. Guided 22.5% from 2023 to 26 revenue CAGR versus the consensus of 17.6. Now, personally for me, I actually think they're going to be higher than this guide here, but obviously really exciting because to have the profitability and this growth is amazing. And actually we'll come back to this in a little bit, and this is a longer term growth on a longer term basis, as you can see here, which is pretty impressive. When we look at the new members ads, I mean the member ads are still hot, so there's still 44% growth for members. The thing is that with Sofi is there's going to be a point where members aren't growing as fast. But the problem is that then you try and get them to buy more and more products. So there's still a lot of hot growth in the membership point of view, but also the more products they use and Sofi can add is going to be the driver for them, and that grew 41% as well. Now you can see here EBITDA as well was up 159% year over year growth. So also what we have with Sofi is they've hit that inflection point now where they're growing revenue at very good rates. As we can see here, they've got a company growing at 34% year over year. But also you've now hit the point where the profitability is scaling, and you got the actual EBITDA up 159%, which is so impressive. And from a GAAP point of view, we've got a GAAP profitable company as well, which a lot of people are going to like. And when you zoom out and you see that growth of members and you see that product growth and you see that products by segment, it looks absolutely amazing. And also what was really good is a few people were a little bit worried about the start of the year of the technology platform accounts. And once again, we've seen good growth in there as well. And that's maybe the only concern that we had, the only concern that I had when I was buying the stock earlier this year. And even that issue has been resolved. when you look at the longer term outlook that we talked about there, absolutely amazing. Now, what was also impressive is the cost control in the business. And this is why they're scaling up profitability so much at the moment. So if you look at technology and product development, there was a little bit of growth here, but obviously when the growth is so fast, the members you're growing are so fast, the fact that this was only up this much is absolutely fine. They're acquiring all these members by not increasing sales and marketing. So they've got to that inflection point now where they don't need to increase the sales and marketing to bring members on board. This is holding still. It's not going up. The sales and marketing ratio to the revenue ratio isn't staying the same. It's improving. So this is word. They've reached the scale point now where the younger generation that are coming on to use a bank are actually going out and maybe going to the pub for a drink or a coffee shop, and while they're doing that, they might be having the avocado on toast, and they are saying, hey, I've got this platform, Sofi, absolutely amazing, go use it, which is obviously really good. Cost of operations as well was up slightly, but once again, less than the revenue amount, and general and admin as well was up again, but same again, less than the revenue amount. So what you have here is the scale kicking in now, where the expenses are not moving in line with the revenue, they're actually improving on a ratio basis. And that's where the scale of the profitability is starting to come up, and that's why you're able to go from a net income loss up to a net income gain. Now, obviously, this is the turning point where they have just turned profitable, so you can't use that from a P ratio that we're going to use in a little bit, but obviously that's going to be something that does really ramp up coming in the coming time frame. Now, the Sofi conference call, Anthony Otto, very good talker, gives a lot of information out, a lot of things in there. He talks about the potential scale of some of the products, the profitability of some of the products as well, which is very good. He talks about the guidance. It was very good to see that, as we've seen before, they are very conservative on the guidance. Sofi gives guidance that is quite often higher than the market expectations, but even then, the guidance is conservative. And actually listening to Anthony Otto in the conference call, when he was going through the conference call, the time he mentioned conservative guidance was crazy. There was one point where I think he mentioned it 4 times within 2 minutes. So the guidance that they're giving is still conservative, which is really good, because what that leaves with Sofi is they kind of bring these numbers out that are already good, but then they're even better. And this is why ultimately in the longer term, I actually think that we could see Sofi going to even higher amounts of profitability than that's forecast here. But the revenue growth could, even though it's guided for 22.5%, could actually realistically push towards the 30%, which will be absolutely amazing. So looks like conservative guidance. Talked about the factoring a weaker economy. We'll see if that happens. They talked about rate cuts. They're expecting 4 rate cuts in the guidance. But overall, there was good information about the potential profitability and growth of a lot of the products they do have in the business. Now, ultimately, when you look at Sofi, I guess it's how do you value this? Where are we going to see Sofi go? And I've got to say, Sofi is one of the hardest stocks to value. And that's why I've just gone to a point of view where I just say $6 is a pretty good buy for this stock. Now, the reason why this stock is so hard to value where it will go in the longer term is because what do you call Sofi? Obviously, it's a bank, it's a financial product, but you don't value like it, because what's different between Sofi is it's online only. And it's got technology. It's kind of a technology business with all the products it has, with Galileo on the top. It's also a technology company. So you don't value Sofi like a traditional bank, because there's no way you're going to have a traditional bank doing these numbers. You don't have a bank that's going to be growing 20+%. You don't have a company that is currently a bank that's growing EBITDA at 100%. So you can't value it as a traditional bank, but then how far do you value it as a tech company? And that's the tricky thing. Now, obviously, this stock is very future thinking. You've got to start factoring the growth, because if you're going to be growing at these sort of revenue rates and your profitability is going to be ramping up, you're going to see the valuation drop very quickly, and it comes dirt cheap very quickly. An example for that is that, yeah, they finally got a P ratio at 153 times earnings, but when you look in the longer term, that P ratio is going to drop very fast. And that's only because they've just got to profitability. When you look at more of the mature metrics, which I think you should do with this, is when you look at like EV to EBITDA. At the end of this year, we're going to be looking around 8 times EV to EBITDA. Within another year, which we need to go, if you're buying this for the longer term, you need to be looking at your 2025, 2026, 2027 numbers. And if they can come that big bank, a top 10 bank out there, and they are trading it in let's say 24 months time, they're trading at 5 times EV to EBITDA and they're growing at 20% a year, and the profitability is absolutely ramping on it, then at the same time, this is surely too cheap. When you look at a free cash flow, we're probably going to be around 12 times free cash flow. Next year, 7 times free cash flow. Same again, 7 times free cash flow, 5 times EBITDA for a company that is growing at these sort of levels. I don't know, I haven't got the ultimate answer what you say it trades at, but I don't think it trades at a traditional bank level. And when you look at these numbers, it's going to get to the levels, or valued at the levels of a traditional bank. It's definitely undervalued for the company. So I look at Sofi and I go, at least at $6, you're definitely buying this at good valuation metrics for the next few years where you'll see a return. The ultimate thing is where Sofi goes to in the long term. I think ultimately we're going to see Sofi enter the S&P 500 within the next 3 or 4 years. What sort of size company it goes to, I'm not sure. But what I would say is that for me, you guys know me, I buy stocks and I try to get 100% return in the next 5 years. And when I buy Sofi and I look at the valuations and the metrics they will trade in the next 5 years, I can see myself doubling up on the share price in the next 5 years. So it ticks the box for me to own it. Realistically though, is what can it go to? And I do buy this, and on the high side, if we do see them hit the higher numbers on profitability, the higher numbers on the revenue growth, there is no doubt that Sofi has that potential to come that kind of 3, 4, 5x in the next 5 years when you look at how low these valuations are only going to go in 2025. Never mind what they're going to be in 2027, 2028. So there is the potential for the big returns with Sofi. But ultimately, I can't give you a definite range because, like I said, we are entering the unknown. We have not had a bank that's going to take this market share that has these growth and profitable numbers. There's no historic measurement to it. So it's really hard to value where we see the upside potential on this one. But what I would say is that I'm confident buying this in the next 4 or 5 years. I'm going to double my money. It's just realistically, I could see myself getting a 3, 4x from Sofi. But same again as I say that, I can't tell you if it's for sure because we're kind of in uncharted territory with Sofi. We also might have competition that comes on in the next kind of few years. If everyone sees Sofi's success, maybe competition comes on. Maybe Sofi, which by the way announced a partnership with MasterCard on the conference call, maybe it makes sense that someone looks at Sofi and go, we need to own these. Maybe one of the banks comes in and goes, this is a company that we need to be owning. This is changing the banking space. Maybe a big bank or someone comes in and buys it. But I mean, realistically, if you're going to buy Sofi, there's no way you're going to be picking this stock up for, let's say, 11 billion in the next year. Everyone can see the growth potential. I mean, realistically, if you are going to take Sofi out, you're going to have to be coming in at the 16 billion range. So either way, then you're still making a good return on it. So I just think it's, sit back, enjoy the ride. It's going to be volatile because, as we talked about yesterday a little bit more, is the shorts. The shorts are going to play the games 100% with the stock. But as a long-term investor, there's no arguing on the financial side of it. The financial development of this company has been insane in the last few years, and it looks absolutely amazing. So yeah, hope you enjoyed a little bit more of a review into Sofi after the mega earnings. Big earnings coming tonight. I think it's Google that's going to report, and I think we've also got a few other ones like Starbucks, AMD. So yeah, I'm sure we'll be making a video about them potentially tomorrow anyway, guys. Hope you enjoyed it. See you in a bit.